Welcome back to Magic Indicator Strategies. In this video you are going to learn an extremely effective scalping strategy in 1 to 5 minutes, and it is very simple. In this video you can learn how to trade correctly with moving averages. So let's explain the strategy. Here we have an exponential moving average in a clearly bullish trend, and as we can see several downward crosses occur. But the moving average only gives you a line and not a price range, so you don't know when it is the exact moment to take the trade because you don't know if it is a true breakout or if it is just close or going to touch the moving average to continue the trend, as we can see in these examples. But when we add a price range to the moving average, we know more precisely if it is a strong trend break or if it is going to continue the trend. So just like the supports and resistances are much more effective when you draw them as zones and not as lines, in the same way we have to do with moving averages. Knowing this, we are going to explain the risk management rules of this strategy, which is essential to obtain great benefits. Now we are going to see how the risk management rule will work for this strategy. And it is the following regarding the take profit. First we are going to establish the stop loss according to the strategy. This is an example only to understand how the take profit works. Then we set up a risk-reward ratio of 1 to 1, and when the price gets here we're going to take 50% as part of the profit from the trade and we're going to move the stop loss to the break even, and the other 50% we're going to let it reach a risk-reward ratio of 2 to 1, and here we completely close the trade. Now let's explain the rules for strategy. Okay, first we are going to explain trading rules for long trades. First, we detect an uptrend when the trend indicator shows us the green color. Second, the price should show us a throwback to the moving average and then return to the uptrend. Third, we enter the trade when the Japanese candlestick crosses up the area of the moving averages. Now pay attention here. We are going to set the stop loss at the lower exponential moving average. Okay, we will see bullish examples. Here we have an example of a long trade. We see in this candle it crosses the moving average and we are in an uptrend. So we set our stop loss and set a risk-reward ratio of 1 to 1, and wait for the price to develop. The price reached the risk-reward ratio 1 to 1, so we take 50% of the trade and move the stop loss to break even. We see that here I reach the risk-reward ratio of 2 to 1, and here we completely close the trade. And here we have another example followed when the previous trade was happening. We see that they meet the conditions, so we open a bullish trade, we set the stop loss and wait for it to develop to comply with our risk management. We see that it reaches the risk-reward ratio of 1 to 1 and we take partial profits of 50%, we move the stop loss to break even. It almost touched the break even, but we see that it reached the risk-reward ratio of 2 to 1, so we completely closed this trade in profit. 2 consecutive winning operations, simply incredible. We will look for other examples. I hope you have understood how to take long trades, but I want you to see the potential of this strategy. In this chart euro-dollar time frame of 5 minutes you would have obtained 4 consecutive operations with the maximum profit, that is, that the price reaches the risk-reward ratio of 1 to 2. The effectiveness of this strategy is very incredible, despite the fact that its risk-reward ratio is greater than 1. Now we will see the rules for taking short trades. Okay, first we are going to explain trading rules for short trades. First, we detect a downtrend when the trend indicator shows us the color red. Second, the price should show us a pullback in the moving average and then return to the downtrend. Third, we enter the trade when the Japanese candlestick crosses down the moving average zone. Now pay attention here. We are going to set the stop loss at the upper exponential moving average. Okay, we will see bearish examples. Here we have an example of a short trade. We see in this candle it crosses the moving average and we are in a downtrend. So we set our stop loss and set a risk-reward ratio of 1 to 1, and wait for the price to develop. We see that the price reached the risk-reward ratio of 1 to 1, so we move the stop loss to break even and take partial profits of 50% of the trade. We see that here the price reached the risk-reward ratio of 2 to 1, and here we completely close the trade. And we see that here we have another consecutive trade. We see that they meet the conditions, so we open a short trade, we set the stop loss and we wait for it to develop to comply with our risk management. It almost touched the stop loss, but we see that it reached the risk-reward ratio of 2 to 1 very quickly, so we completely closed this trade in profit. Another 2 consecutive winning trades. This shows us once again that this strategy is excellent for beginners, intermediate and advanced in trading. I hope you have understood how to take short trades, and I want to show you again that here we have 4 consecutive short trades. We see the third trade was a loser because there is no strategy with 100% win rate, but still the results are brutal. You put this strategy to the test and tell me what results you get in the comments. Now I will explain the indicators. Okay, let's add the first indicator called 3EMA created by Hungengayan 1193. Then we add the swing arm ATR trend indicator created by VSNFND. Let's tweak your settings to get the same amazing results. First, the 3EMA, we press on this indicator to modify its inputs, and we are going to change all the length to 32. The second EMA we put in high. The third EMA we put in low. Now the style. The first EMA will be white and its opacity at 100%. The second and third EMA will be yellow with 100% opacity. Now we modify the swing arm ATR trend indicator. We go to its inputs and we are going to modify the ATR period from 8 to 200. And the ATR factor from 5 to 8. And in its style we are going to deactivate all but the last option that says plots background. Okay, now you can apply this strategy in your trading. I hope you liked the video and find it useful. Don't forget to subscribe and like. See you soon.